The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the last day of the week, Friday, May the 24th. And great 2 hours and a really fun show with Tom and Daryl just a short while ago. And gosh, Daryl's really producing some fantastic stuff in that diagnostic trading program that he's got. So congratulations and great show. And Steve Rose, of course, kicks it off right there, 9 o'clock in the morning at TFNN. And let's see, so today's Friday. Straight after me, you've got the primal, what is the primal, living a primal lifestyle, of course. And that's always interesting. They go into areas that I never even dreamed of. I mean, just it's embarrassing that you don't know some of the stuff that is really makes sense, common sense to do with your health. So that's a fabulous show you got. So you got Nico DeHaan, Paige Clark, straight after me, living a primal lifestyle. Then you've got Daryl. Daryl comes back, Daryl Martin with his diagnostic trading hour. You got Dave White. Hey, Dave, congratulations. That was some program you got there because I was looking this morning at, let me find it here. Let me see if I'm going to click on the right clicker. Ah, there it is. And you had, in terms of your butterflies and Gartleys, you had a bullish Gartley, AB equals C to D, ratio equals 0.93, target 468.14. And I looked at this and I thought, that's interesting. Intuitive surgical ISRG, because I like to go through some of these when I'm looking for ideas. Sometimes, of course, I look at it and I say, no, not in my technique. It ain't ready yet. But, boy, this is a beauty because I want to show you something here, folks. Look at this. ISRG is right now up $24 at 502. Wow. Hey, great. The technique, it hit a round number high of 508. I would say that's starting to get into resistance, but certainly round number high. Hey, congratulations. Great program. Folks, we've got a Tiger Dollars promotion going on right now. It's the end of, it finishes the last day of the holiday this weekend, Memorial Day weekend. And I have to tell you that to save 20% plus get a tax deduction, because this is fantastic. Tom, of course, you know, is from the Boston area. He's from East Boston. And as a kind of a tribute and recognition and to pay homage to those poor folks that died in the Boston massacre, the Marathon massacre, we're going to be, through TFNN, we're going to be donating a certain percentage of your Tiger Dollars that you buy right there to the fund. I think that's fantastic. So go to the front page. You got my opening call. That's my daily newsletter. Very comprehensive look at the markets, and you know that I've been looking at the markets in certain ways. Spoke on air the other day in the morning when Bernanke was testifying to say this is a pivotal moment in this entire bull move, mega bull move. It's not. I'm not giving you a Dow's going to be down 1%, 5%, 20%. Got nothing to do with that. I'm talking about emotionally and in many, many other ways. And I think we're going to look back and find that it absolutely was a pivotal moment. Now, let's run through the numbers, if you don't mind. We've got the Dow coming back down a little bit more, but now it's down at only 43 points at 15,250. The S&P is down 9 at 60.41. The Comp Index is down 15 at 3,444. Quick look at Apple. Apple's up 2.65. Up at 444.96. That's kind of nice. That's a boost to the Qs. We've got now this is interesting because gold is down 6 after actually doing quite nicely, is at 1386. I'm going to go through that straight after I'm done with all this. Silver's down 0.02 at 22.48. Platinum's down again, down 4 at 14.55. High-grade copper is at 3.2. It's down 40.46. Crude oil is down just less than a point at 93.39. Bonds are up 13.30 seconds, and the dollar is down. Have we made a peak? Was that a peak D or E now? I can't remember. I think it made a D and then it went to an E. Let me double check. Yeah, peak E. Short-term top. Actually, I have to call it a near-term top. I haven't yet. We have to wait for the close today to see whether I can call it a short-term top. Leg E in the weekly. This is going to be very interesting because it's a high-level consolidation so far. So now I wanted to talk briefly about, just real quickly, and then we'll go to callers. I wanted to talk about, should I do the GLD? Let me go to the GC, the Q contract on gold. See, I drew this in before, that there should be an H pattern that goes to an M formation. And that M formation, I didn't like the fact that that Roman candle in the weekly and in the monthly chart came back so quickly. I do like the fact that it's held the low. It hasn't gone below 1323, the low of the 16th of April. 1338 is the recent low. I suspect it's just going to worm its way higher. Percentage move, not a big point move. So that's the way I'm looking at gold. And the dollar, but that's also because the dollar's got a high-level consolidation. If the dollar has a high-level consolidation, then you can look at gold as possibly having a low-level consolidation. Sounds funny, but that's called a low. I will call it a low-level consolidation. Now, here's something else. We had a caller yesterday, and I think it was Robert in Chicago. I get called during Tom's show. And thank you, Tom, for allowing me to do your show. It was a pleasure. I really enjoyed it. Now, in that show, we were looking at Procter & Gamble. What I said is, he was in a long-term position. I said, I'm not going to do anything. I don't want to interfere with what you've done. You've done a fantastic job. You've held it for a long time, kind of a buy and hold. I believe firmly that there are stocks that have been absolutely fantastic buy and holds. But I have subscribers who still have Exxon and Philip Morris and Altria. They've had it for the dividend for years and years. In fact, one person inherited it. So, hey, it's still giving the dividend. They've had fantastic runs. I think that absolutely there's a case to be made. There has been a case to be made for the buy and hold. I think in this particular phase that we're in right now, some of those stocks could have a digestive period, just taking a breather. But we're going to look to see if there are other stocks that have actually taken over that kind of longer-term outlook. So Procter & Gamble spiked up today at 81.71 right now, up 3. Had a round number high of 81 a few days ago, about a week and a half ago. Today's high was 82.35. They got the new CEO, I think, back again. Now, what I told Robert was, I do not want to interfere with your strategy. The only thing I would say is to take a little bit off if Procter & Gamble closed under 77, I think 77.80 or 77.50, I said. And so far, the reason being that the monthly chart was still very strong, even though the weekly chart looks like there's a potential for a double top here. But that's just basically what I said. I wanted to point that out. And now I wanted to look just real... no, I actually want to take callers. We got Mark in Fort Collins. Hi, Mark. How are you?
Basil, how are you doing today?
Very well, thank you.
Good. Hey, I was looking at Exxon kind of tested its low area from yesterday, or not Exxon, U.S. Steel. And
yes.
I took a dip in the water there at around 1830. And I know we're thinking that some of these materials might be where we rotate into. So I'm wondering what you think. It looks to me like it made a peak C, and it looks like a peak D would be over 1970. So it looked like a pretty good risk reward. And then I put it stop.
I looked at this. It got away from me because, as you know, I was looking at down in the below 17, the 16s, and then it just sort of showed up. I actually chose something else in the steel aluminum sector, which is holding very nicely. It's not done much, but the fact that it's holding right here is really important. And the fact that U.S. Steel, folks, we're looking at U.S. Steel Core, It's at $18.56. It's up 6 cents. The weekly chart is in leg B. That's the one that I'm really focusing on, because the monthly chart, I'm going to pull the monthly chart. Folks, if you're looking at Tiger TV, it's really fascinating to see these charts, because the monthly chart, that's usually the one on the right. I've just expanded it out now with a white background. You can see that pattern that I call the H pattern. And what it's done is it's gone under the 16.66 low to 15.80. I think that was the last low. Let me just double check. 15.80. Why am I not getting the pointer? There it is. Yeah, 15.80 last month. And so it's got a series of H patterns, but the rally was very weak the last time, but so was the pullback from the 1707, is it, or 67? 1767 area back in 2012. So I think that the evidence is going to be coming up in the next, it might have happened already, but the real evidence based on the weekly chart will come up in about, I'd call it the end of the first week of June.
Okay.
And what I'd be looking at is if U.S. Steel, which is trading after a peak C, you see the dip from peak C to yesterday's confirmation of it becoming a peak, and today's action with the MACD turning down, but the stochastic having the stochastics having that pattern I call the H pattern or right shoulder failure pattern. So it's going to be really important that U.S. Steel gets to $18.95, preferably $19.10 or higher, quite soon. Because if it can do that, then I've got myself a high-level consolidation after a very strong pullback. The high-level consolidation is treating the weekly chart, 9-period exponential moving average, exactly where we are now at about $18.50, as the magnet that must become the propellant line. But the big thing is that the monthly chart, that's why I'm saying we want to get into June with rising prices. I think you've got yourself an attempt, like stepping in and saying, I believe that the risk reward will be stronger if certain things happen. Because right at this particular moment, it does look like it wants to test the doji candle of 1787, the close of the 16th. So that's not a big deal, 70 cents away. But then all of a sudden, you're going to be looking at the stochastic being lower and the MACD in the daily crossing negatively. So this is what I think. If you've just started your position.
Yeah, it started about 20 cents lower.
20 cents lower. Now, the whole thing about this, just need to look at my 120-minute chart. A, B, C, D. Yep, peak D again. At 120-minute charts give so many peak Ds. It's just incredible. What a beautiful technique. So what I'm looking at here is the weight of evidence will only be with you if it rallies a little stronger into the 19s. I'm just going, you know what I'm going to do? We've got a break coming up. I'm just going to run a quick scan to see what other stocks there are. I know there's Schliebel, there are a couple of other stocks. Let me just do that. I want to see how the others are doing so I can give you a comparison, apples to apples, instead of like just guessing. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow is down 60. S&P is down 9. So this is what I said to subscribers today, based on my work, was that there's an H pattern that's forming in the Dow Diamonds. The Dow itself, the wick that was formed, we should be testing inside, then testing the 9-period exponential moving average is kind of what we have. So my assessment right now, just for the market-wise, is that we've got a digestive phase. I don't think we're going to see the recent highs tested for just a little while. I think a chunk of the move down intraday was done yesterday. Now another chunk needs to be done. And I'm suspecting that it's more time than price, but my bias right now would be we are still very selective on the long side, trying to add to the long side, funnily enough, but at the same time, by the end of this week and by the end of the day, coming up this on Tuesday, we should have a chunk of stocks that look ready for the short side because they've just had a really big move. So now we're looking at USX, which is one of those stocks that's exact opposite. This is if you had to put a chart of one of the, let's look at Celgene just for a moment. Look at Celgene, CLG. Look at this stock. Look at the monthly chart right there. Now look at X. You tell me, huh? It's the opposite. It's going to lows while that's going to highs. Now, stocks that are going to lows are going for a reason. Stocks that are going to highs are going for a really good reason. So what I'm looking at here is that there's a chance over the coming few weeks that if I'm correct in looking at the slow buildup like a kettle at the back, on the back burner of the cyclicals, and what a pretty bird that is. That's a cardinal I'm looking at, just went flying by. If I'm looking at the heavy-duty United States manufacturing and the conglomerates, that sort of thing, I want to be looking at the laggards, because I believe that fund managers are going to be starting to look at the laggards and start to push them up. The orders, that's the sort of area I'm looking at. So I'm going to suggest something. Now, I know that, Mark, you've got this more as an experiment. You want to just tiptoe. It's a funny thing. On this particular chart, I would start the small position as you've just done, but I would probably say you can have a stop on the small position, but still keep something. And the only reason I'm saying to you I would keep it, I can see technical signs of a divergence. I can see things happening that say, yes, it could pull back, but there could be a sudden move to the upside, which you most probably won't get because it'll be so quick. So to be in it with an $18.30, maybe $17.20 on this particular, I'm just throwing it out. It's just an idea. Now, if this is a trade that you hope will go from a very short-term position to a longer-term position, you need by next Wednesday afternoon to Thursday morning to see today's high of 18.81 taken out, and you want to see as quickly as possible by Friday a week, $19.10 is going to be the target. And it should do that without taking out the low of $18.11 of the 17th, but definitely mustn't take out the 1765 low, because then it says, I might have to go a little bit longer and a little bit deeper. But I'm saying that a 1 point, a stop round about, you'll have to figure it out. But if I was nibbling here, I would nibble, and I'd maybe even make the position a little less, because I want to give it more room. That's really the way I would look at it. A starter position for a potential intermediate term move, but you won't know until it really starts to get into the 19s. I hope that helps you.
Yeah, it does. Thank you.
Thank you very much. Let's go to Mike in Long Island. Hi, Mike. How are you?
Good, Basil. Lumber liquidators. I don't know if you ever looked at this one.
Are you kidding? Boy, this is Lumber Liquidators. Is the one that I was crying about that I kept missing, because look at the monthly had just one period of 2 months where it had made slightly lower lows. The moment it broke above the 9-period moving average back in January of 2012, over a year ago, at $22.20, it is not even once or twice. It might have just touched the 9-period moving average in the monthly chart, and now it's a little extended, but oh man, it's been a fantastic stock. It's in leg, I'm calling it leg F/B in the monthly. My preference right now is to call it an F, thinking it could go to a G, and then I've got to watch out. But I don't have any signs yet in the monthly to have to make a decision. In the weekly, it's in leg D. Possibly today it's going to make a peak D because it won't go above 90.92. You've got that long Roman candle that was formed this week, so it should test 79.69 at some point. That's the low of yesterday. And a peak F in a doji high in the daily. Hey, I'm going to talk about it. We'll come right back with Mike in Long Island. We're going to look at Lumber Liquidators, a fantastic stock, bargain lumber products, and we'll be back with Jim as well.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians. And we're looking at LL, which is trading at 85.49, down 54 cents. Lumber liquidators. And there's a beautiful doji can. I love these doji cans. I had a whole seminar on candles. I also had a seminar on what I call the silent signals, and that silent signals can be anything from round numbers to candles to what I call the silent ones, are the ones that you don't see if you did a scan because they occur on a different day to the top, etc. So we're looking at lumber liquidators, and I'm going to ask, Mike, what are you doing with lumber liquidators? Because it definitely is in the overbought category technically.
Yeah.
But it is in the sector that's still in high demand, which is the housing sector, and they are the beneficiaries. So what are you doing?
No, I'm not doing anything. I was just curious about what you see here.
Well, okay, well, my signals are saying right now that there's a really good chance that over the coming 2 weeks, I would even put it to 3. I'll tell you right now, if lumber liquidators drops below 83. Let me just give you the exact number here. Below 83.50, no, if it closes below 83.50, there's a really good chance we've got a 5 to maybe even a 10-day consolidation. It could even be more. I don't know yet. Why? Because then it should retest because of the Roman candle, this ChapmanWave Roman candle in the weekly chart that's being formed. Folks, if you're looking at my charts, it's the middle one right there. I call that a ChapmanWave Roman candle. Why ChapmanWave? Because I've never seen anybody discuss it, not in the terms that I do. And a Roman candle, what does it do? It blows up. So it fizzles out, and that's exactly what happens to this candle. If the price goes halfway into the wick, which will be 83.12, then it's going to retest the low and probably retest the 79.67 level. So that's the way I'm looking at it now. I believe that this coming Tuesday, which would be the 20th Tuesday, that people are expecting the market to be up. I would not be surprised if at the end of the day, even if it is up nominally intraday, that in fact it does close down, or it closes at the very best, because there are so many signs here saying that we just need to work this overbought situation off right now to get it done, so that we can have a high level consolidation rather than a major collapse. We should have collapsed already. Yesterday, intraday should have kept going down, should have closed down minus 185. Today should be another triple-digit down day, and then we would be in a bear phase on the daily, not the weekly, but the daily. So that's my recommendation. Don't do anything. I don't know if I'd even short it. What I would do is I would want to look to buy it in the 75 to 73 area, but I need to see the chart formation at that particular point. So I hope that helps you.
Yeah, so you basically think we might get a C and a D in the monthly?
From everything I'm looking at, because the MACD is still so strong in the weekly and the stochastic is at 94%, there's a real good chance that it could extend into the summer, and then if it makes a D anytime in August to September, I'd say watch out. In fact, I wouldn't be surprised if August, September is a time where generally in the market we've got to be careful. But let's just do one thing at a time. So that's my. Let me just make one statement here. A close above 90.92 was the all-time high. A close above 92.35 immediately raises the base. So the actual base of support will be the low of yesterday, 80.65. But I just want to go one step at a time. I actually don't see a big rush to actually buy lumber liquidators right now, but I will if there's a gap that's at 74.70 back on the 24th. Hope that helps you. Have a great weekend.
Thank you very much.
Thank you very much. Let's go to Jim in Boston. Hi, Jim. How are you?
Hello. How are you?
I'm well, thank you.
So Yahoo is my interest today, and I wondered if you could go through the daily and the weekly and the monthly.
Okay. Now, folks, yeah, I'm looking at this, and I'm saying, the stocks that I had in my opening call, I would say not every single one, but I'd say even maybe over 90% of the stocks that we've had over the past 2 years have all done fantastic. We had Yahoo. We had it along at $16.80 back in October of last year, and we made a full $2.71, and I never got back in. I can't believe it, because it's a perfect stair-step consolidation and breakout upside. Stair-step break, and if you're looking at the beautiful rising sine wave of the fast-moving average in the daily chart, it's just fabulous. Now I think I have the Dow, the S&P, the Qs, the IWM. I have them all in the dailies and saying, whoa, be careful, we've made either PDs or E's.
Right.
Even Yahoo on the daily. I have in the weekly, if I have to look at the SPX.X, that's the S&P weekly chart, I have a candle here that says, I'm in leg E, the stochastic's just about to turn down, relative strength is a little toppy, on-balance volume is a little toppy, but the MACD fast-moving average is still very strong. So my daily charts all around are saying, this is really a moment where you've got to respect that there could be a pullback, but the fact that the weekly charts and the monthly charts are so strong tells me that I've got to consider this a consolidation phase. I don't see it at this point. I don't see a downside smash unless the Yahoo in this case has if there's a gap down on Monday, it'll make an island gap top at peak D, and it'll have to gap below 25.55. I don't see a reason for that.
Right.
So do you have any position at all?
I am. I'm long, and I'm looking for an exit. Although through some other methods, I've got a high occurring in early August.
Well, that would match. You see, that would match.
But not on the same trend. So the trend is going to lighten up, it looks like, and but I don't have the high occurring till August.
I'm going to make this real easy.
Yeah.
If you are in quite a bit lower down, and it's been a core position, the only thing I would say to you is that, number one, it is real close to 26.27 to the 27.68 high. So the only thing I would say to you is this. I don't want to change. It's the same as Robert recorded on his Procter & Gamble position, long-term position yesterday. I don't want, you did the entry, a fantastic entry. I didn't keep holding my entry. That would have been great, but it wasn't. So I'm going to say to you, you are the boss. You are the one that has really managed Yahoo, which is trading YHOO, is trading at 26.32. Even on a day like this, it's trying to get back. It's up 29 cents. But everything about it says there should be some kind of a consolidation. The only thing I want you to think about, I'm not even sure you have to rush to do it today, I'm sure Tuesday or Wednesday will be fine, is to say, you know, at this particular level, there's something that I often quote Kramer, because in my mind, Kramer, I'm not talking about the actual positions that I haven't assessed all his positions.
Sure.
But I love his thinking, and I've followed him since 1986. I think he is one of the great market minds that's out there. I don't know, he's got stored in his mind about 2,000 stocks or more. He has a perfect memory for this stuff. And I love the way he looks at something. He says, I'm not interested in where it's been. I'm interested in where it's going.
Yeah.
And if we are interested in where it's going, I've got leg C up in the monthly chart. I know from my own experience that in other periods, I have bought knowing that there was probably a market top, but in the portfolio, my family portfolio, whatever it is, I said, I don't care because this is going higher. So even though it pulled back, when I look back now, I say, wow, that was great. I probably wouldn't have timed the next entry because I'm always busy doing other things. It did go down, but now it's way higher. And that's really the way because I'm expecting a leg D, I would say that if you're in a position right now, that's your core position. The only thing I'm going to recommend to you is if you want, you could take, you know, just like a little bit off that's dedicated to putting back, and you put it back if Yahoo at any point in the next 3 weeks pulls back somewhere to the cluster pattern that gave me the potential for an instant restart. And I'd say 2187, that's very far down. I'm going to even go to the doji. The doji of the 5th of April with a low of high of 2390 and a low of 2301. Somewhere in that area, there should be some support. And even if it pulled back further from there, that's the area it could come back to. So if you're in it as a longer-term position...
You have that, just a second, you have that based on the instant restart occurring there, huh? That's how
what I'm basing the analysis looking out. The instant restart, the potential for the that area right there that I'm circling. If you're looking at it, it's just above it. Actually, it sort of goes into it. It's the candle of the 5th of April. That doji candle there. I like that. The two candles together tells me that if there's a pullback, that's the cluster formation. That's the area that should become some support. And to give you good guidance, because if it holds there and then starts another big rally, that says, whoa, that's it. Because now I want to tackle higher highs in the monthly. That's kind of what it's saying. Now, the only thing I would say to you is in this market right now, you know that there's going to be a hassle and a tussle between the bulls and the bears. So I can see a very choppy market, and that's going to establish for me whether we're looking at other sectors that are going to be strong. Now, if you look at Yahoo, this is really, since the really big move that it made back into July, August, September of 2005, this is the first real big rally. And I'm putting into the category of possibly the new leadership that's coming in. I'm going to talk a little bit about this in my, I almost forgot to talk about it, in my upcoming live. Give me a chance, give me a moment here, if I can just find it right there. Coming up this Thursday, 10 o'clock till 1 o'clock, here in the Newton area of Massachusetts. There will be, let me go to it, a live Tiger Technicians Hour during 11 and 12. But from 10 o'clock to 1 o'clock, in any case, I'll be live, but you will be the studio audience for my live Tiger Technicians Hour between 11 and 12. Starting to fill up. I love that. In fact, it just reminded me I've got to go and I've got to confirm the booking for I've got the projector. I just need the screen. And that reminded me. So, folks, go to the front page of TFN. My obligation is to tell the folks this is at the Women's Club, Newton Highlands, Massachusetts, just near one block from the station. And I need to tell them how many people are coming. That's all we need to do. It's a free webinar. I just need to be able to tell them to go to the front page and sign up. Right, now we're back again. So, Jim, what I wanted to say to you, I think that this could go into the category of new leadership. It's walking the 9 EMA in the weekly chart. I like it, and I don't want to interfere with your trade other than to say, if you want to take a little bit of money off, I don't see any reason there, but then try to dedicate that same money to lower price, and you'll actually get a couple more shares. But the point being that you're going to reward yourself for a great trade. It's right now possibly leg F or B in the weekly chart. I don't see anything yet, although there are signs that the weekly is getting a little toppy. That's all I'm saying.
Right, very good. Well, thank you very much.
And congratulations. That was a fabulous trade. Jim in Boston. And I hope we're going to have great weather for this weekend. Let's go to Robert in Chicago. Hi, Robert. How are you?
Hi, Basil. I just had a question regarding Procter & Gamble.
Yes. So yesterday you called me and we were discussing it, and I said, you've got this as a long-term buy. I don't want to change anything about your thinking, right?
Actually, yesterday you mentioned you were a little negative on Procter & Gamble, which...
What? Yeah, what we were looking at, let me just go through it so we can understand what was going on. Procter & Gamble had a very quick peak A, B, C, D, way underneath the 82.54 high. And what I said was that the way it's looking right now, it looks a little tired, and that if it went under, I think I said 77.80 or something like that, I would definitely I would lighten up a little bit. But if it did spike above yesterday's candle high, then that at least that would be a good thing. And the monthly was good. The weekly was the one I was a little concerned with. So out comes the news today that the former CEO, I think that's what I heard, is being rehired, and it spikes up to a new, to under the previous high, but it spikes up to 82.35. So I don't think anything has changed in my thinking. I mean, who's to know that this guy would be instituted as the boss? Did you do any lightening up or anything?
No, I just actually called to ask you exactly what you just said. What happened today really hasn't affected your thinking that if it goes under 77.80-ish, it may go down towards 75.
Right, and that 75 will be a very critical level. That's my point being. From the candle that was made a few months ago, that big red candle, normally I would just grab it and draw a rectangle formation. But what I was really looking at, there were two things I was looking at. One was that the weekly chart, the stochastic and the MACD, even with this move today, the MACD is just turning up and the stochastic turn around. If it didn't have this fantastic move today, I would not be surprised if Procter & Gamble was actually down at it closed yesterday at 78.70. I wouldn't be surprised if it was at about 78.20 right now. But you know what? Give me a second. I just want to do a little bit more work, and then I want to give you another level that I'd be looking at that you might want to take a little bit off and that you want to put back. So I'll be right back with Robert in Chicago. We're looking at Procter & Gamble. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. Yes, don't forget, Nico and Paige coming up. Should be a wonderful show, as always. Now, we're looking at Procter & Gamble. You know what I'm going to do, Robert? The guy is still coming in. He still has to do the whole turnaround, whatever he's going to do. I don't know what it is that he's going to do. I want you, you don't have to rush to think about it. But if you were thinking of just taking a little bit off yesterday, then to do it 4 points higher, I'm saying to myself, you know what? That's the only thing I wanted to say, that money could be rededicated to Procter & Gamble if it does this consolidation and it comes back to the low 77, 75 area, and then you can just put that back. You've made 4 points. That's the only thing I wanted to say. I do not want to change your longer-term thinking, because you're the guy that got into it. You're getting the dividends. You know exactly how much part of your portfolio it is. If you ask my opinion, I think this is a possible double top in Procter & Gamble. I would take a little bit off just both to reward myself and say, what a beautiful advantage you gave me. Yesterday at the close, it was at 70 in the 78s. Today it's 81.75. So that's the only thing I would say. And if it goes higher, you're still in the stock. If it goes lower, you have a little bit of money to put right back into the stock, but preferably at a lower price. That's all. So I hope that helps you.
Thank you, Basil.
Thank you very much for calling. Hey, congratulations on a great position play there. And have a good weekend. Robert in Chicago. So, folks, let's do this. We've got a moment here. let me just go back again. Someone, I got an email here. I just want to, yes, I'm going to tell you what I'm going to do. First of all, go to the front page of TFNN. You will see right there, the Tiger Conditions Hour live broadcast, May the 30th. I'm going to be going through a bunch of things. I'm going to show you, I'm going to explain to you different techniques that I have, what's been working, what I think won't work, etc. I'm never afraid to talk about what does work and what doesn't work. There are enough good trades. It's just the way it is. I take any bar chart like this, and the point of the whole thing when I discovered the ChapmanWave methodology was you can take these bars, which mean very little, and the moment you do something like this, like that, and you put the letters on, especially going to a peak D, at least a peak D, look what you've got. You've got yourself a roadmap. Isn't that the best thing? I don't need volume. I don't need a MACD. I don't need ChapmanWave, other methodologies other than the notation. That's just one technique. To put that together with other techniques is fabulous. So I'm going to go through the simplicity of the concept. I'm going to explain it. I'm going to take questions from the audience. It's a proper workshop. I want you to give. I want to give. That's the way it's going to be. Your questions will be. I always say that when you teach, you'll learn more, and that's going to be important to me. There were patterns that we spoke about today. Look at the double top. This is the pattern that we're looking at in the ChapmanWave methodology. We're looking at chapter 22. Go to chapter 22. You look for double top or the drop bucket pattern. And what did we see in Procter & Gamble? Didn't we just see a pattern like this going back to the top? And then it could pull back? So that's the pattern we're looking at. There it is. Where's Procter & Gamble? Right there. So the application of techniques is really what I'm talking about. There it is. You can call that a very deep bucket pattern. And what it says, at some point it should fill. Doesn't have to do it right away. Maybe it goes down to 80 and then bounces up to 81.26. And then maybe finally it comes down and it tests the high of today. I just think it's good risk reward in saying, hey, this could be a time, an opportunity to at least take some profits, and that's the way we'll look at it. So I'll be showing the ChapmanWave methodology, a lot of questions about the CD, introducing the ChapmanWave methodology, and of course, let me just quickly, we're about to go end. Hey, have a fantastic weekend. Remember Memorial Day. We've got to think of those who have helped us. So this is peak E at 15,542. I already drew in the cup formation, and that's what I'm expecting, that the up channel is going to be absolutely critical, and that makes the whole 15,050 to 15,000 area is going to be really critical come the next 2 weeks. So thank you for being here. Have a fantastic weekend. Go to the front page of TFN. Look at the Tiger, the bonuses you get with Tiger dollars. Look at my service, the opening call, and I hope to see you Thursday week in Newton, Mass. Have a great weekend.